Hey everyone, welcome back to Money is Game. In this channel, we all talk about many things about finances and how to earn money. So let's start our today's video. Today, I want to challenge something that most people take for granted. Buying a home is the smartest financial move you can make. But what if I told you that it is wrong? What if buying a house is actually one of the worst financial decisions for most people? Stick around because I am going to break down the real math behind home ownership, the hidden cost, and why renting might actually make you wealthier. So, you have heard it 1,000 times. Stop renting, you are throwing money away. Buy a house and build equity. But here is the truth, that is not always good advice. Some of the wealthiest people, they rent by choice. Today I am going to show you why, and by the end of this video you might just rethink everything you have been taught about the American dream. So here is section 1, the myth of equity. Let's start with this. When you buy a house, you are not instantly building wealth. Most of your mortgage payment, especially in the first 5 to 10 years, goes to interest, not equity. People think they are investing, but they are really just paying the bank, and that is before we even talk about taxes, insurance, and maintenance. So ask yourself, is your mortgage payment truly building wealth, or is it just a more expensive form of rent? Now, moving ahead to section 2, the real costs of owning a home. Now, let's break down the hidden cost of owning a home. Property taxes can eat up to 1 to 3% of your home's value every year. Homeowners insurance, another few thousand a year. Maintenance, you should expect to spend at least 1% of your home's value every single year just fixing stuff that is not optional, like roofs, HVAC system, appliances. They all break and it is all on you. So the real cost of home ownership, it is way higher than most people think. Now we are moving ahead to the section number 3. But homes appreciate, right? You might be thinking, yeah, but my house will go up in value. Let's talk about that. Historically, home prices barely outpace inflation. After adjusting for taxes, fees, and inflation, the average home has appreciated only about 1% per year in real terms. Compare that to the stock market, which average 7 to 10% annually. So, unless you bought at the bottom of the market and sold at the top, your house might not be great investment you think it is. Now, we are moving ahead to the section number 4, renting versus buying. The math. Let me explain. Let's run a simple scenario. You are looking at a $500,000 home. You put 20% down, that is $100,000 upfront. With mortgage, taxes, insurance, and maintenance, your monthly cost might be $3,500 or more. Compare that to renting a similar place for say $2,000 a month. That is $1,500 in monthly saving plus the $100,000 down payment you could invest elsewhere. If you invest that money with a modest return, you could easily end up with wealthier than the homeowner in 10 to 15 years. It is not just about rent versus mortgage. It is about opportunity cost. Section number 5. When buying does make sense. Let me explain. Now, do not get me wrong. I am not saying no one should ever buy a house. Home ownership can make sense if you are planning to stay put for 10 years or more. You are financially stable and not stretching your budget. You want stability, emotional satisfaction, and are okay with the extra responsibilities. But buying out of pressure or because everyone says you should can lead to serious regret. Now, let's move ahead to the section number 6, the emotional trap. Let me explain. There is a lot of emotion tied to owning a home. It feels like security, like success, like adulthood, but feelings do not pay the bills. The smart move: make decisions based on math, not emotions, not tradition, and definitely not fear of missing out. Now, here is a conclusion. So let's step back for a second. For decades, we have been told that buying a house is the ultimate financial goal. It is the symbol of success, stability, and adulthood. But here is the hard truth: that idea was built for a different time, a time when homes were cheaper, interest rates were lower, and people stayed in one place for 30 years. That is not the world we live in today. In today's economy, where mobility, flexibility, and diversification matter more than ever, locking yourself into a 30-year mortgage might not be the smartest move. Home ownership can be great if it fits your life and your goals, but if you are buying just because your parents did, or because you are tired of hearing renting is a waste, you are making a decision based on someone else's playbook. And here is the part no one tells you: you can still build wealth without owning a home. You can rent and invest the difference. You can build multiple income streams. You can achieve financial freedom without tying your money up in the drywall and property taxes. In fact, some of the savviest investors I know, they rent, and they do it proudly because they understand the difference between a smart investment and an emotional purchase. So ask yourself this: are you buying a home because it is the right move for you, or because everyone else says you should? Second, are you looking for flexibility or a fixed address? Third, are you trying to grow wealth or just follow tradition? Now, because the biggest mistake you can make in the personal finance is assuming someone else's path is right for you. If this video challenged your thinking even just a little, give it a like. It helps the algorithm and helps other people break free from outdated financial advice. Subscribe if you want more no BS money talk every single day. And I would love to hear from you in the comments. Have you ever regretted buying or not buying a home? Let's get a real. Until next time, stay sharp, stay curious, and don't be afraid to challenge the norms. That's how real wealth is built. So, bye for now. Let's meet in another video with another financial advice.